Everybody to the second in our series of commercial mortgage basics, commercial mortgage training. It's the second webinar that we've got here at Glass Lake. If you haven't had a chance to see the first one, I suggest that you do. It's a lot longer than this one's going to be. This one will not be as long as the introductory one. But today, what we're going to talk about is navigating your commercial mortgage, the deal timeline. So basically, I get this question, not a lot, but from time to time with somebody that hasn't done any type of commercial financing in the past. They would say, well, how long does it take for a typical commercial mortgage to get done from the beginning to the end? And I always say, like, look, it depends. It depends on the deal. It depends on the lender. It depends on the level of scrutiny, what you got to do to prepare for it. But generally, you're depending on the lender, and then always the file. It can be as fast as literally a few days to months, and I mean like 4 or 5, 6 months, depending on the situation. The quicker ones, the ones that are a few days, are the pure hard money private. If you've got a pulse, they'll give you a mortgage, but you're going to pay. That's when the rates are extremely high. The fees are extremely high. Loan to value won't be high. Like, loan to value might be restricted to 60 to 65. And they don't do a lot of, let's say, underwriting, right? They assess it a certain way. And that's the space that they play in. So what I'm going to talk about is not those players. I'm not going to get too much into the extremely long ones, but what I want to do is compare the more typical lenders that are out there, and I'll talk more about them shortly, to us, and what's the difference. And that'll sort of illustrate the sort of process involved, how long it's going to take typically from the moment you pick up the phone and say, hey, I've got a deal, will you look at it, to the time that the client, the borrower, gets their money. So it will be not one of those, I need the money tomorrow because my client's going to get sued if he doesn't close. This is more of the mainstream type of deals. Okay, so the timeline is basically how long does it take to close. So what I've got here is what typical lender deal flow. So this is a typical deal flow for like a lender that it would be anybody from a Schedule A bank. Those tend to take longer, all the way to, let's say, your credit unions and people that, like your home trusts, your Equitable banks, people that were a little bit to this side. Remember, if you see the first video, I always say that the banks tend to be here, the private, the mix, the hard money, those ones that can close very, very quickly but charge you an arm and a leg, are here. We're sort of situated here with Home Trust and Equitable and the credit unions here. So we fill in nicely here. But don't let that fool you, because even though we're here, we do a lot of these type of deals, a lot of the bankable deals. And I explain a lot of that in the first video. So typically, if you're looking at anything from a bank to a home trust to an Equitable to a credit union, where you have to prepare the file, it's not, the hard money. You pick up the phone and, a couple of phone calls, quick emails, and in a few days you get your money at like 15% plus 5% lender fee, never mind the broker fee. It's anywhere from 1 week to 12 plus. So it could be anywhere from 1 week to 3 months plus. And the plus depends on the complexity of the deal, the size of the deal. I'm not going to even go with CMHC. CMHC is another layer altogether. It adds a lot more time, especially now. But anywhere from a week to 12 weeks, 3 months. So when you look at the flow, when you look at the process of, let's say you're going to deal with a bank or one of these folks, like I mentioned before, the credit unions, the Equitables, the Home Trust, first thing you do is you're going to contact the lender. Now that could be either the BDM, it could be an underwriter, it could be someone at the branch. It depends how that lender operates and how they manage their commercial files. Everybody's different, right? And then you're going to do what we call a deal run, and that's where you vet the file. So you're going to proceed to give them some details about the deal. I've got a property. It's a mixed use downtown Toronto. I need, X amount of dollars. I'm looking for Y amount of loan to value. Would you be interested in this type of file? And then the lender would say, yeah, we're interested. We're lending right now, whatever their response is. So assuming that they are going to be interested in the file and they want to proceed, then typically, as a broker, you would gather more docs. You might have docs already. You might have maybe a purchase and sale agreement, maybe an MLS, maybe the client has sent you everything. But then you're going to gather some more information because depending on the lender that you contacted, they're going to need that file submitted a particular way. And if you don't do it a particular way, it's gonna cause a lot of delays. It's going to cause a lot of stress on you, on the client, because it's going to be a lot of back and forth. So it's good to know up front. And if you're not experienced, then in time you pick that up. But I can even explain to you like what's involved, right? So you're going to gather more documentation, and this could be in the form of a full application, personal net worth, more details of the property, if they've got old reports, that kind of documentation. And then you're going to pre-screen it. You're going to do, it's not a full analysis yet. You're going to, now that you've got more information, because remember, client came to you, said, look, I have this deal. You picked up the phone, contacted a lender, found a lender that would be willing to do that deal. Now you're going back to the client, unless the client gave you everything up front. Depends. If they have, then, you go to the next step, which I'll go to shortly. And then you go further and say, okay, you know what? Now I've got more information. I've got a lender that was potentially interested in this deal. Let me do a little bit of pre-work. Let me do what we call a pre-screen, just to make sure that everything lines up, especially based on the lender that you've reached out to. So then once you figure, okay, this is a deal that, you know what, the lender, I know their guidelines, I know what they look for. You're going to then prepare what we call a lender package. And that involves, first of all, doing your deal analysis. Now, it's important to note, deal analysis, that can be very, very involved, or it can be very, very basic. Depends on the lender. And this is why I want to compare us to I want to compare us, GlassLake, to these other lenders that I've mentioned previously. So the deal analysis also, stay tuned because it's going to be our next webinar. So the next webinar, I'm going to talk about the deal analysis. I'm going to go more into I wouldn't say in depth, but more into detail about what that involves. And depending on the level of analysis that you have to do for this particular lender. Some of them want everything. Some of them, like GlassLake, we don't even want a deal analysis. We rely more on the phone call. If you have something, we'll ask you for it. But again, I'm going to get to that shortly. So you're going to do your deal analysis, prepare the lender package. A lot of these lenders, rather, they take their deals PDF format. So you email them your package. So you prepare your lender package, and it's like you're literally going to have, a stack this big of all your reports, all your documentation, all your analysis, and you're going to hand it to them, but it's going to be in PDF format. You're going to email them, Dropbox, through their portal, however they accept it, but then you're going to send them all the information. And the critical part of the deal analysis with a lot of these lenders is the executive summary or the deal summary or the cover sheet, where you basically summarize all of your analysis in 2, 3, 4 pages, maybe even one, depending on the complexity of the deal and how they want it. And you're going to lay out all the critical points. And again, I will go through a couple of samples when I do the deal analysis webinar. And basically, you're going to ask for what you need, what you want. You never say, especially in these cases with these lenders, what do you think? How much can I get? That, I wouldn't say turns off lenders. They want to see a prepared package so that they can confirm what you're asking for. Like, you basically underwritten the deal. And then they check it off and say, okay, you're asking for 2 million based on your argument. I'm only prepared to give 1.9, or you know what, 2 million, you bang on the money. And then, you know what I mean? They're not going to start doing it from scratch to determine a number for you. Okay. That's important, again, because I'll get to GlassLake shortly. So once the package has been provided to the lender, they do their review. And like I said, you might be asking for 2 million. They'll either come in at 1.9, 1.8, or they'll say 2 million is fine. Then they'll come back to you with an offer. They'll say, we're prepared to do this at this rate with this term and so on. And sometimes that could be an initial conversation by phone or an email that they'll get back to the broker and say, hey, we're ready to do this number. This is what you're looking at in terms of rate. This is what you're looking at in terms of fees, et cetera, et cetera, et cetera. Do you want me to issue a letter of interest or a term sheet? Those are what we call the next step, where it's kind of official when they put it in writing. Again, it could be an email, it could be a phone call. So provided that the broker and the client, sometimes the broker says, just send it to me, I'll sell it to the client. Or if the client's very particular about, whether it's rate or personal guarantees or fees, they might say, let me speak to my client first, and then I'll get back to you. So the lender, is going to wait for some sort of response after they've done their review. But in most cases, they will come out with a term sheet or a letter of interest, an LOI. Now, it's important to note that a term sheet or an LOI is not an official document. It's just paper with some words on it that summarize the offer. Unlike a commitment is more of a binding, especially once it's signed. It's more of a binding contract, more of a binding agreement. But we'll get to that shortly. So the letter of interest is issued. So in the letter of interest, they'll say, look, we're prepared to give you 2 million, prepared to give you this rate. We're prepared to, at this fee, et cetera, et cetera, et cetera. In order for us to proceed to the next step or to proceed this fully, we need these conditions to be met or to be fulfilled. And that's the next step. So it's going to be a matter of fulfilling the letter of interest. The letter of interest could include, if you don't have it at the initial stage when you're preparing your package, sometimes you'll have an appraisal, sometimes you'll have, all the documents you had. And sometimes it could be an initial, like I said, initial stage. And before you get to the ordering an appraisal, the client may want a letter of interest to say, look, I've got somebody interested. Now we just got to meet all the conditions in the letter of interest so they can fully underwrite the deal. So to fulfill the LOI conditions, that would include third-party reports. On commercial, definitely an appraisal. It could include an environmental report to make sure that there is no potential liability because of contamination. Some lenders may even want a building condition report. Some lenders, even though it's not warranted, will ask for those extra reports just because of the way they underwrite, and maybe they securitize their loans. They want to make sure their loans are fully squeaky clean, everything's been accounted for, because then they might turn around and sell it, and those reports are going to be needed for that file. Some lenders, like Glass Lake, it's more of a common sense approach. If it doesn't make sense to order an environmental, why? And we only rely on a building condition assessment if photos from the appraisal show that there's definite issues with the property, or there's comments in the appraisal that show that there are definite issues with the property. Let's say stains on the ceiling from a leaky roof. Sometimes when the roof leaks, it stains the ceiling. Or a roof that's obviously in need of repair, like, the roof is just deteriorated. Or the appraiser says, look, there's water running in because of the leaky roof, that sort of thing. Or if there's any structural, like there's cracks in the foundation, they go in the basement and they'll show pictures and there's obvious cracks in the foundation. Windows are in rough shape, that sort of thing. So then we might, most lenders, that it's a common sense, like Glass Lake, will say, look, you know what, I think we're going to need a building condition assessment to make sure that the property doesn't need a lot of work. And just as an aside, if you're giving somebody $2 million on a property worth, let's say, $3 million, and the property needs $500,000 or $1 million worth of repairs in the short term and in the midterm, like in 5 years, in 1 year, 2 years, 3 years, 4 years, 5 years, that property is really not worth $3 million, and the mortgage you're giving could be adversely affected, because now the borrower, you're giving them $2 million on a property they're buying for $3 million. In the next 5 years, is going to have to shell out $500,000 to $1 million on repairs. That has to be accounted for up front. So, the numbers kind of make sense. Again, that's just as an aside. So the next step, fulfill the letter of interest, the LOI conditions, order all your reports. get whatever other documentation might have been outlined in the LOI. The lender might be saying, you know, we need financials, we need identification, we need all the stuff that maybe you didn't prepare in your lender package, which is fine. You don't always have to have that stuff up front unless you do have it, it's been provided. So now once the lender gets all of that, all the conditions of the LOI are met, then that stuff is now sent back to the lender. They do their full underwriting. Now they're prepared to say, look, we've got everything that we need to fully underwrite this deal. And unlike residential, it could be, it tends to be, not could be, it tends to be a lot more involved. So once they've completed their underwriting, and if you look on the left, I've sort of put a guideline. The first week, the first piece, week 1 to 4, you do everything from contacting the lender to getting your lender package ready and submitted. You can obviously do it in a week or 2 or 3, but I've kind of gave you a 4-week period because as you gather more docs, you got to ask the client for docs. Sometimes it takes a while for them to get you the docs. And then weeks 5 to 8, that's the part where the lender does their review. They give you the letter of interest, and then you fulfill the letter of interest by ordering all the reports. You might have ordered an appraisal in week 1, and it's coming now in week 6, and then you provide that all to the lender. So I'm saying by week 8, the lender can maybe do the full underwriting. Between week 5 and 8, they could be doing that. So once they're completed their full underwriting, they will prepare a commitment letter, same as like a residential deal. They'll issue the commitment, and then the conditions in the commitment have to be fulfilled. Just like a res deal. And once those conditions are fulfilled, the deal is instructed, legal work begins, and then funds are dispersed. So that can take typically anywhere from, I put 12 weeks, but in my past life, I worked for a Schedule A bank. I worked for CIBC, and the fastest deal I ever did with them, which is going through this whole process, this more involved process, was 4 weeks. That was the fastest deal, and I was shocked that we were able to do it. But that was kind of lightning fast. Now, it could be a bit different now, with certain technologies and certain ways of uploading docs and all that. And typically a 12-week plus period was not uncommon when I was at the bank. And today that could still apply. So, this is more of a guide. But as you can see, there's a lot more work involved from the broker. At some points, and I didn't get into it now, the more experienced brokers, they do collective retainer, especially in the first, week 1 to 4, depending on where they're at in the discussion, where they're at in the process. Just so the client, because look, if you're spending 12 weeks and you don't get a deal and you don't get paid, at least, collecting a retainer up front. A lot of them do that. I'm not going to get into that now, but that is something to just be aware of. So time is money. I just alluded to that. You can spend all this time and not get paid, right? So time is critical. So this is why when we look at the timeline of a deal, how much time you spend with the lender on a potential deal is critical, because that could be, you're being taken away from potential deals that you're going to close quickly, like some residential deals or some smaller commercial deals, right? Everybody likes the big commercial deals. I like them too, but I prefer the smaller ones. The smaller ones, they tend to turn around quicker. They can be very, very, very profitable, especially if you get into with a lender like Glass Lake that pays you a finder's fee and you charge on top, and you can churn them out fairly quickly. So when you look at the flow of Glass Lake, their deal flow, I apologize, there's an error on this one. I'll get to that in a sec on the full lender underwriting, but the first step is to contact Glass Lake. So that could be either myself or one of the regional sales managers, one of the RSMs, usually by phone or by email. Say, I have this property, it's located, at this, this is the address, this is the type of property, this is what we're doing with the file. And, client is looking for a refinance, looking for a purchase. So we do a quick deal run. Now, I like the phone. I also like the email, but the phone is more immediate. You can usually, over a period of a few minutes, get a sense of whether or not we could do the deal. So we vet the file just like in the typical lender cash flow. So then we tell you basically, if the deal makes sense for us to proceed, and it's very, very minimal. You don't have to gather all kinds of documentation. You don't have to do a lot of pre-screening. This is the big difference. Now, if you notice on the top row, there's 3 steps, and that's all considered week 1. If you looked at the typical, when you got to the full underwriting, you're looking at week 8, weeks 5 to 8 before you got the full underwriting, because you have to gather all the documentation. So typical conversation with a broker would be, tell me about the property. What's the address? What type of property is it? If it's a gas station or a hotel or a church, we don't do those. But if it's a storefront with apartments up top, that's mixed use. That's exactly what we love. Multifamily, retail, industrial. We do bars, restaurants, daycares. We do some of the funkier properties, some automotive. Tell me about the real estate. Tell me what they're doing. They're purchasing or refi. Credit score is very, very critical. So I always say we need a minimum of 650. Make sure the client has 650. They might not know at the time of the phone call. I just said, look, make sure before you send it in, that you got to confirm what the credit score is. If the credit score is 650 and above, we're good to go. If it's less, don't bother, because we won't be able to do the deal. That's a hard no. So we have that quick conversation instead of delving into all the numbers. And one thing I always ask, because of the way Glass Lake adjudicates their deals, income is the one area that we have a bit of flexibility. So we don't rely solely on the income of the commercial property. We can rely on other outside income, which is business income, personal income, income from other rental properties, to support that. So I don't really go down and get all the details about the income. I just like to say, look, make sure the client has various sources of income in case we need to tap into those. Okay. And if they don't, that's fine. If the property meets the type, the location, and the credit score, I usually say just submit the deal through Filogix or Velocity. So there's no big bundle of PDFs to gather and all this other stuff. Now, as a broker, if you have that information and you want to email your RSN, you want to email me, by all means, you've got it, send it. But the initial conversation over the phone is what determines, or initial email, if this deal makes sense. And then I'll usually say, if it meets the minimal, real estate, credit score, etc., I say submit the deal through Filogix or Velocity, like a residential deal, and then our underwriting will pick it up, and they will get the full lender underwriting at that point based on the application. So you don't need to have all the documents up front and so on. If you do, that's great. But if you don't wait. Let's try to get that in as fast as possible. And then what happens is the lender, full lender underwriting, then the commitment will be issued similar to the typical lender, and the same sort of rules apply. There'll be all these conditions. We do not issue a letter of interest. We don't do an LOI. We don't do a term sheet. We don't have that extra step in the middle. We go straight to commitment. And in the commitment, everything will be spelled out, whether it's rate, whether it's term, and then, all the conditions. So we'll say we need an appraisal. We may need a phase 1, depending on the location. Like I said, if it makes sense. If not, then we're not going to ask for it, right? So then the broker takes that, gets the client to sign it fairly quickly, and then the process of fulfilling the commitment begins. And it's very, very straightforward. We are still dealing with a commercial mortgage. We're still going to have a lot of issues to fulfill, like the typical lenders, but maybe not as much, right? And this is why a commercial mortgage on a commercial property takes a little bit longer than, let's say, a residential, right? Because there's a few more moving parts than a typical residential deal. To put it in perspective, and I started earlier, I said, I'm not going to focus on those deals where we need the money right away, right? Like, you've got these hard money people that are going to charge an arm and a leg. If you need that, that's fine. But at Glass Lake, we've had some instances on the residential side where we literally closed. I know on several occasions I've heard we've closed it in 24 hours. From the moment we got the deal, we got the phone call, to the client getting their money. That was a unique situation. And I think in both instances, the deal was secured at another lender, and at the 11th hour, that lender pulled out, and the client was, had their back against the wall and needed to close immediately, and they needed an institution like us. They weren't willing to go to one of these hard money guys for temporary. On the commercial side, so that's residential. Residential, you can usually close within a few days. We can close safely within like 4 or 5 days if need be. At Glass Lake, you're looking at 2 weeks on the fast side, and that's if you have everything up front. So a lot of times, because of the space we play in, a broker would have shopped the deal to another lender, and they would have gotten the appraisal, they would have gotten whatever they need, thinking that they were going to get approved, and then it's not approved. So they come to us, and usually we have everything up front. So we have the appraisal, we have all the documentation. If we've got all that and they submit it and they email at the same time, and then we just forward it to the underwriter, you're looking at a 2-week turnaround, because it's primarily, the bulk of it's going to be like the legal work. Once it's instructed, the legal work, and then, dispersing the funds. I wouldn't say on the high side, it could definitely go into months, depending on the participation of the broker and the client. They're responsive. They're not taking their time getting back and providing information. But if it's a normal deal, it can take about 4 weeks. So that's why I say between 2 and 4 weeks is what a typical Glass Lake commercial mortgage would take. A typical lender, it would be 4 would be very, very aggressive, but it is from 4 to 12, right? So we're a lot quicker and less document focused, and the process is a lot simpler. So if you look at the steps involved here, they're a lot less onerous. There's a lot less involvement for the broker. Time is money. And it's funny, that slide just popped up by accident. Your time is valuable, but you can still get the same result. And on top of it, we're going to pay you from the lender fee. We charge 1.5% on all of our commercial deals, and we turn around and give you 1% of that. You are free to charge over and above, but you have to collect that part on your own. So as you can see, instead of spending 3 months plus, you could spend typically less than a month, and you could churn these out. And the more simpler the deals, this is why I like smaller deals. The bigger deals tend to be a lot more, not a lot, but they tend to be more complex, a lot more work involved. Yes, they tend to be bigger and you get a bigger reward, but they also tend to be a lot more fragile. The smaller deals tend to be more robust. They can take a beating, they're fast, and you can just keep churning them out. And you can make a decent return on your time that you're spending. So consider our proposal of 2 to 4 weeks versus 4 to 12 plus. And you can see, so we provide, smoother, simpler funding. So we are your small commercial pros. And what I'm going to suggest is that you can either scan that or take my information down here. And as you can see, coming soon, we've got the deal analysis webinar. And I'm looking forward to that one, because that one I get more into the meat, and I'll show you some examples of like an executive summary, how to structure your loan note, how to get your biggest bang from the shortest amount of time. So you're not really wasting time preparing an analysis. And that phone call that I referred to, it's literally like a mental checklist. And I have a physical checklist that you can have. And if you want that, email me and I'll get you a copy of that. But there's a physical checklist, but then the idea is to have that mentally. So, there's a process that you follow when you're speaking to myself or one of the RSMs on what we need to know, right? The purpose, purchase or refinance, owner occupied or investment property. How much are you looking for? I'm looking for 70% loan to value. Property's worth 3 million and I need 2.1. Property it's a refinance. They bought it 2 years ago or 5 years ago versus 6 months ago, that sort of thing. And then the analysis, I'm getting ahead of myself. I'm starting to do it now, but it will involve looking at the 3 things. I always say, and if you look at my first webinar, I talk about the triangle. It's real estate, borrower, and income. Those are the 3 critical things we have to address. And I'll go through the whole thing. So when you're on the phone call, when you're on the phone having a call with the RSM or myself, or when you're typing up your loan note, you have this checklist that you're going through. Purpose, what do we need? You know, what type, purpose, what are you looking for? And then talk about the real estate, talk about the borrower, talk about the cash, tell me what you need. And that usually would cover it. And the deal analysis is an elaboration. It's a building on those basic concepts. So you go more in depth on the real estate, more in depth on the borrower, more in depth on the income, and analyzing every aspect of it. Whereas on a phone call with Glass Lake, you just hit the high points over the phone, and we'll say whether or not it's a deal that you should submit. Anyhow, thank you for your time. Hope you enjoyed this webinar. Went a bit longer than I had hoped, but when I get talking, can't stop me. So enjoy.